my side hobby, where I put all my attention, researching, talking about with friends, trying to figure out what's going on. The last 2 years in particular, DeFi really caught my eyes. Um, I I was working in consumer lending at the time and used MakerDAO to get a loan in a couple minutes, and was like, whoa, this is this is like wild. It was super easy. I know people talk about how the UX isn't that great, but it was a couple clicks to get, a fairly large loan. Uh, no need to sign up for an account, nothing like that. Just deposit collateral and go. And my mind was absolutely blown, and I had to really dig into it more. Um, so I started digging into it, and I'm seeing like they're doing more lending volume than a lot of traditional fintechs. I looked into the company. There's like 20 people working on it, and I was like, wow, this is like wild. Like how are they doing this with only 20 people? And so that was kind of like a eureka moment for me. Um, I went and then I looked at Uniswap, and it was really similar. They're doing the similar trading volumes to Coinbase at the time, um, and at times, and again like less than 20 people working on the project. And I was like, and Coinbase has like 6,000 employees. And I was like, this is just really, really efficient, right? And so from there, I dove way into DeFi and started exploring all the different protocols, all the different chains, doing a bit of degen yield farming, all kinds of stuff. And yeah, and then I realized that this is just like a wildly different thing than just uh, you know, Bitcoin or Ethereum or anything like that. And so from there, I had to figure out how to get involved. And so I spent a lot of time um, exploring different companies, trying to figure out where I wanted to dive in. I eventually got connected with Nevin and Josh Furness on our paid product team. And we chatted for a couple months actually, and ended up figuring out the best way to come on board. And so I've been here for I think just over 3 months now, which is kind of crazy.
Cool. And so how did you reach out to Nevin at first, or did you speak to Josh, or how did that first encounter come about?
It was actually a recruiter originally, and then they connected me with Josh. Um, and I spoke with Josh, and he was like, "Oh, like you're you definitely know a lot about the DeFi side. You should talk to Nevin." I was originally, like learning more about RPay, learning more about the app. I've done a variety of mobile apps. Um, but yeah, then it started talking to Nevin about the DeFi side, and I was like, oh wow, this is all the things I'm interested in: developing a protocol, stable coins, lots of trying to figure out like what is the best way to take these composable things and create something bigger with it. And so yeah, so Nevin and I, you know, talked for a couple months, made sure that we could get comfortable with each other. Um, and we ended up realizing that we both wanted to work together quite a bit, and so yeah, I came on board.
Super cool. So
Um,
you've more or less landed your dream job.
Yeah, exactly. I still 3 months in, I still end up every week thinking like, wow, I can't believe I get to do this full time.
Nice one.
so on that note, can you tell us more about what your scope of responsibilities are at Reserve?
Yeah, sure. So if you're familiar with product management, it's kind of similar to that. But I'm responsible for uh, bringing the R token, sorry, bringing the protocol to market and figuring out how to grow its adoption.
Interesting. Um,
Bit
so
nebulous, admit.
yeah, I mean, could you expand a little bit on that?
Yeah, sure. So I do everything from working with the engineers and designers on figuring out like how do the features work, what are the things that we need to figure out in order to get to launch. Doing everything from uh, like pressure testing and figuring out specific product requirements and working with them to understand like what is the shortest path to get to launch. Uh, Also, though, I spent a lot of time with Sinatra and Smetty. We also brought someone on um, as a biz dev manager, figuring out like how are we going to grow this thing when we launch. Um, and then it's really the janitor bucket job where you do a little bit of everything, and if there's something that anyone isn't currently responsible for, then it kind of falls to me.
That I mean, that sounds like a lot of fun. I'm not like joking or anything, but no, it actually does.
Yeah.
Cool. Thank you.
Well, just to pick up on a word that you used there, you said launch. So I'm sure you've seen in Telegram and on Discord that it maybe only about 1,000 times a day people ask about mainnet. So we know that we can't not ask the question, and we know that you probably won't give us any dates. But what sort of timeframes are you looking at for reserve? Because we've obviously just found out this week that the coding has finished, and so we've got some audit work and a whole bunch of testing to do. So, what are your kind of expectations around that?
Yeah, sure. So, we're definitely targeting this fall. I mentioned this in the AMA the other day, but I've for many, many years now, I've been working with software engineers on products, and I've learned to never commit to a date because it'll never be right. Um, but we're definitely targeting this fall, and so the code's now all done. It was kind of funny. The moment that we all decided it was done, the next day we had to like tweak one more thing. In the way that some of the governance works. But yeah, it's all set now. We're just going through the audits. We've been getting feedback from a variety of different teams, um, whether it's Trail of Bits or some other folks. And now we're really just focused on testing and getting ready for launch. The crazy thing about a protocol like this is that the code is a piece of it, but there's also like how do we actually manage this thing when it's live, right? Like how do we who's going to be hitting the buttons on staking and unstaking? Who's going to be, like all these different things that you have to get ready. That's more than just deploying the code. And so that's a big part of what I'm focused on now with the team while they finish up testing.
Mm-hmm. And are you're building a test net to be able to test the DApp?
Yeah, we're building some kind of staging environment. I think I mentioned this the other day, but we there were some annoying things in like making sure that it's stable, and making sure that all the services that we need to run, making sure that Aave and Compound are up. Those are like two big protocols, for instance, that we rely on to make sure that things are working, and we need to ensure that the sorry, my computer like that. You need to make sure that you can interact with those protocols on whatever net you're using. And so we'll likely use a fork of mainnet as a sort of staging environment, if you're familiar with that kind of term. And right now we're focused on making sure that we can use it to do testing and to get folks get a couple folks on there testing around, giving us feedback on the UX, etc. Our goal is to make it publicly available, just like any other demo environments that protocols have. But our number one goal is to make sure that we can use it.
Cool.
Okay, so you're head of platform. I guess like 1 year from now, how does Reserve and what it has accomplished look? And not only Reserve but the protocol. How does it look? If all goes well.
Yeah, so I think there's a couple big things. So we're building a platform, right? And platform in the tech sense is like we're building this thing that other people can use in order to launch products. And um, a big part of that is ensuring that we can continue to be seen as a trusted place to build and launch products. That there's a thoughtful, trusted team behind it. And this is something that Nevin, Matt Elder, Taylor, and everyone else that's been working on the protocol has done an amazing job of the last couple of years. Um, from what I've seen, and I think a year from now, if that continues to be the case, if Reserve continues to be seen as a thoughtful, trusted group that is trying to help companies build their products and build their brands, then that will be a big win. And then from a quantitative perspective, if we can get our TVL into the billions, that's our goal for the next year.
Nice.
Yeah, great.
So, I mean, like, how about this? Can I ask another question on that?
Yeah.
So how many like R tokens would you view in like 12 months as a success as a success?
Yeah, I think that's a little that's a little funky. I think there's a world where there could be 1,000 R tokens and they've all got a couple million uh, dollars in market cap, and that would be a success. But I think the reality is there will likely be a power law distribution in which our tokens are most successful. Um, the I think it's more likely that there will be a couple big ones that take off. And this is something that we've been chatting about a bit. I'm trying to remember if it was like in public or with the team, but um, at the end of the day, each of the art tokens in and of themselves will be products that need to get product market fit. And so, we'll be working with the teams that are launching these things to try to help them understand that and help them get adoption in the ways that we can. But the reality is that uh, these things in and of themselves will be products. And so, like the way that they're configured, the way they're governed, etc., they'll need to appeal to the community and find their customers and figure out how to grow that way. And so it'll be really interesting to see like which ones take off. But there's definitely a couple use cases that we've been hearing, whether it's in like one-on-one conversations or in conversations in the Discord of different things that are really starting to resonate. I think it's probably likely that there will be one that actually looks a lot like RSV that has no yield that's distributed to the stablecoin holders, and all the yield goes to the insurance pool. The I think there's likely another one that where the yield is distributed to the stablecoin holders. Um, and then I think there's other ones that are kind of like branded stablecoins, right? That are whether it's gaming companies or uh, businesses that are looking to have their own stablecoin, whether it's on Ethereum or on other chains. For, the uh, the model of getting the model of participating in the upside of the growth of your ecosystem is definitely an attractive thing we've been finding. And so, any business or area where that is a good value prop, I think there's an opportunity for them to launch a stablecoin.
Yeah,
Th-
and yeah, I guess so an early adopter with that would jump in, and let's just say two or three companies do this. One hits it off, then you can expect the floodgates probably to open because everyone else will need to have a part of it. A bit like when the internet just started and a few companies built websites, and then everybody else realized that they had to have one.
Yeah, it's exactly right. Um, but then there's also, yeah, you can definitely see that world where like one game does this successfully, and then all of a sudden all the other games are like, oh wow, that was a successful model, right? And you see the copycats in the crypto gaming industry are massive.
Yeah.
Like you saw Wolf Game take off, and then all of a sudden there's like 47 other NFT games that are modeled exactly like that, right? And so yeah, that could definitely happen.
Actually, leading on from that, you mentioned, I think it was in the AMA, you mentioned that you spoke to a small Latin American bank. So, is that a reasonably common occurrence? I think it did. Did they call you? And how many kind of contacts like that do you get in general? Because, yeah, okay, they're a small bank, but that's a bank, and they're talking to you about an R token, so they must have a pretty high level of confidence in the team.
Yeah, definitely. It's so that one in particular, I get connected through the RPay side, right? Because they've got a variety of relationships with different folks, and that they're like, oh wait, you guys could help us also launch a stable coin. Interesting. And so I got connected that way. But a bit higher level, like I kind of like keep repeating the product background. But I'm a really big believer in speaking to customers, and so I try to have a few of those conversations a week, just so I can continue to like understand what their needs are, understand like what are the problem statements that they're trying to
Mm.
solve for, and also understand like any hesitation that they have. So we can either address them with future features, or figure out how to address them in documentation, or like in the ecosystem of support services that we're trying to come up with here. And so, yeah, so I'm having a good amount of those conversations with Soham and I. Soham's the guy that we brought on to help with biz dev.
Mm.
We're trying to have these conversations and make sure that we can like track them and understand like, okay, this group wants this type of R token, this group wants this type of R token. They're thinking about it like this. This is the big thing that they're trying to solve for, et cetera. So that we can get an understanding of what are the where is the product market fit going to be most likely?
Mm. Mhm. Oh wow, exciting times ahead, I think.
Yes.
I think so. I think I tweeted this the other day that like I had hit day 100, and it's been a very, very exciting 100 days, and I think the next 100 will definitely be more exciting.
Cool. Um, so I guess like what will Reserve be doing to help promote the launch of the protocol, and what can like us as community members help do to help?
Yeah. So great question. We have uh, so was chatting about this on Friday with Sinatra and Smetty. Uh, uh, we've got we're working on a biz dev roadmap right now. That we put together a draft of it, and it's something in the coming week or so we're figuring out like what is the best way. We want to brainstorm with the community, and there's going to be a lot of different things there. There's going to be things um, that like the team itself will be most situated for, and also there's things that the community can really dive in on. And so, our goal is to make this thing public and make it so that folks can understand what is the best place to jump in. Something that's been um, something that's been really great to see is actually since we started talking about in being clear about the fact that we won't launch our tokens, I think that it's been um, we've seen a huge change in the attitude of the way that folks are thinking about that. There's so many ideas flowing now. The brainstorm channel has been great. Um, there's a variety of different folks that are like really, really diving into this, and it's been really exciting to see. And we're hoping that the same thing can happen with the biz dev roadmap. So more to come there, but yeah, we're looking to collaborate on one, what is this thing? What is this thematic biz dev roadmap? Like what are the different areas, et cetera? Are there things that we're not thinking about? Um, and then, from there, make this thing public and um, figure out how we can include everyone in the process.
Yeah,
Okay.
I think one of the like best moves I've seen Reserve make in a while is them choosing not to make any art tokens at the beginning and to kind of only very gently nudge in the direction of, hey, this is what we think might be good for collateral in these art tokens for these different ideas. And I think it's really good. It kind of forces people to think. So that's I like it a lot.
Awesome. That's great to hear.
It's yeah, and as we've just been discussing our tokens as products, so there are enough levers within creating an R token for you to customize it for your own business, really. And my next question was going to be, if you were to package an R token, put it in a box, and put it on the supermarket shelf, what would the strapline be to sell it? But it's going to be different on your business use case. So the product market fit, the use and the look and feel of an R token is going to be slightly different. So what I'm going to ask instead is, if it were a Latin American bank, what form of R token would they be looking to create and why?
Um, Something that's fully collateralized, insured, and potentially yield bearing. That's like super generic. um, but I think the thing that's most attractive to them is um, the the ability to get a piece of the yield from the collateral
Mm,
at the banks. If you think about like what is the business model of banks, they accept deposits from consumers and then go create some kind of yield with those deposits, whether it's by lending them out for mortgages or doing a variety of different things with them. But that is kind of like the core thing, and they're seeing these yields in stable coins on chain, and they're like, oh, interesting. This is another opportunity for us, and so
mm.
um, I think that'll who knows if that one will end up going anywhere. But I do think that this is something that businesses will see and want to participate in the upside, whether it's by latching onto an existing art token or launching their own.
Yeah, because let's just say you're a multinational company and you have treasury that
Mhm.
you need to keep hold of because you've got payroll and et cetera, et cetera. So there's always an amount of money that's just sitting somewhere, and it's probably with a business bank, and it's probably earning nothing. Um, and if you can deploy that capital as quickly as if it were from a bank, then why wouldn't you? Is the question. Why wouldn't you use an R token?
Yeah, yeah. I think what's really interesting is like you're someone in that situation. I've never been in that situation, but I'll try to put myself in the shoes of the person that is in that situation. You likely care, number one, about preservation of capital.
Mm,
Uh, and number two, you're like, oh, like let's get yield where we can. Um, and so the preservation of capital thing is big. And, I think that that's like, this is a combination of things that there's a variety of different groups in, whether it's like the business you're talking about, whether it's, and actually related like DAO treasuries, right?
yeah.
Um, DAOs typically have like a a product that they're working on, whatever that thing is, right? DAOs are kind of just like LLCs at the end of the day, and so they can have any type of product. Um, but they want to focus on that, and they don't want to focus on getting the yield, but they do want the yield in a way that helps them preserve their capital for funding ongoing operations, and potentially growing it, making it so that they can fund more future operations, and also fight against inflation in some way, shape, or form.
Mm,
Um, and so, in our token's an interesting way to offset or rather outsource that that yield generation, because the governance of an R token is presumably focused on uh, balancing the risk and the yield at all times, whereas the DAO might be focused on um, you know building out their NFT game or building out their DeFi protocol or building out like whatever it is, and so they don't really want to focus on the treasury management aspect. We were actually speaking to some hedge fund managers, and they referred to DAOs as like the slowest moving money out there, because they're typically focused on not treasury management, right? And
Yeah.
so, someone might like throw in a proposal and it'll like go weeks before they get enough attention on it, and then they finally make the change and then the funds. Um, but it's typically a much slower process than, the the trader that is thinking about it full time. And I think our token governance probably sits somewhere in the middle of that, um, where there still will be like a proposal process and things like that. But it is presumably what that group of people is tasked with doing all the time. Um, so yeah, so I feel like I've been rambling a bit. So I'll end it there. I think the original question was.
So to kind of continue on that, I'm going to go and ask a kind of a big question. And so Malo and I were talking about this right when you jumped in, and you and I had talked about this a little bit like a week ago or so. But essentially the question is, so Avi and Compound, they're lending and borrowing protocols, and so RSX is the idea that you can put multiple different tokens from these protocols into a single R token, and then they basically just represent lending positions, and so like this is like a market, these two protocols, and so it's like there's a balance between lending and borrowing, and so if our tokens grow like within the limit to just like a gigantic amount of money, like would it possibly be feasible to have too much lending going on and for it to affect like our token yield rates or even just yield rates in general, like nobody wants to borrow anymore. So is like kind of like how do you think about this? Do you think that's a problem, or what does the team think?
So I don't think it's a problem. Let's talk a bit about how those those market dynamics work a bit. So like you were saying, uh, the lending markets are a market, and there's supply and demand. People are lending on one side, borrowing on the other side. For a variety, people are borrowing for a variety of different reasons, and it's actually something that what's great is Aave and Compound are constantly trying to figure out how can we get more people borrowing to increase demand, right? Like they are at the end of the day building a product that they are trying to solve different use cases for, and I think to date there's been like a couple main use cases. On one hand, there's speculation. At the end of the day, people are borrowing in order to speculate on other things. They're doing it to lever up. They're doing it to put those loans into stablecoin yield farming or um, less safe yield farming. They're using those loans to do other type of investing. And in the current market conditions, people aren't doing that as much. And so as a result, you're seeing the lending rates go down quite a bit. Um, but there are also a subset of folks that are using these loans to, put a down payment down on their house, do a variety of different things. And I think, collateralized lending, margin accounts at stock brokerages, these are things that like a small subset of people do use for, normal um, financial planning type things. And I think we'll continue to see that grow a bit. But it'll be really interesting to see how Aave and Compound can continue to grow the demand for their products. But in terms of how it relates to our tokens, I think um, businesses that are launching our tokens or people that are launching our tokens, they will need to expect a bit of variability in the revenue, right? It won't be a constant thing. It'll be there's a bit of like a boom and a bust thing. I think if you look at the historical Aave and Compound rates, um, they they right now they're in the sub 1%, but they go as high as like they've gone as high as 8%, right? And it's really kind of back and forth between those numbers, really dependent on is there demand right now. And so I think that likely continues. I don't think that will uh, even out for at least a while. I think it'll continue to be a bit boom and bust on the rates. Um, but some of the things that we're thinking about is what other types of economic activity can we capture in the form of collateral? If you think of Aave and Compounder, they're lending markets, and you're collecting interest on loans, right? That's like a classic, for thousands and thousands of years, that is a classic financial activity. Another classic financial activity is trading, right? And what we've seen with DEXs and the AMMs, the automated market making type protocols, is a new way to get a composable position in lending your money for people to trade with. And so, we think that that's like another way that we could capture some economic activity, diversify the revenue streams of our tokens, and make it so that our token managers, aka governance, will have another opportunity to diversify those revenues into a different type of economic activity that isn't as boom and bust. It is. I think, as I'm kind of saying this, I'm thinking that those are likely correlated in terms of trading volume, and the demand for speculation uh, are pretty correlated. But it is a different type of revenue stream. And so, what we'll be thinking about is, and something that we really want the community to be thinking about is, what are different ways that we can create different places that we can, create collateral plugins to capture different sorts of economic activity. There's been a lot of conversations in the Discord about some more exotic options, like creating delta neutral positions where folks are like long the spot of Ethereum and then short the perpetual derivative. And as a result, maintaining a delta neutral stable price and collecting the difference, and collecting the potentially higher yield off what you can do with the Ethereum. That's like out there on the spectrum of more exotic things. I think there's a stable coin that's fully built that way. It's called UXD in Solana, where the entire collateral vault is this, like, long Solana, short Solana perpetual futures. And the redeemability is based on the price of Solana, et cetera, et cetera. Without going down too far of a rabbit hole. The point is that we want to open up to the community and get feedback from different folks on, like, what are the different types of collateral vaults that can be written and used with the protocol, because anyone can write a collateral plugin. It's one of the very flexible things of the platform, is that those are separate contracts that can be written and deployed and included in our tokens.
Cool.
Yeah, I'm very fascinated with what you guys are doing, and it's seeing how it's going to play out is going to be very, very interesting. So
Some of the topics on the Discord around the brainstorming, truly novel. That interestingly enough, that said, so that one side is the offering of our tokens to the world as a product, but kind of Reserve is in a unique position in that they already have 670,000 people who use an app which can potentially use our tokens. So how much interaction do you have with the RPay side about the ability to use our tokens within the app?
Yeah. So we speak quite a bit. We do a recurring go-to-market strategy to make sure that we're comparing notes on how are these launches going to work together, how are our plans lining up, what are the different things we need to keep in mind, et cetera. And at the end of the day, from the protocol's point of view, our pay is another customer that will be that will hopefully be using our tokens to allow customers to interact with them, send them around, hold them, et cetera. And it's great that we've got this very tight relationship. We're in the same company, um, and can get a lot of feedback from them. And so we, like I mentioned, we do this recurring meeting where we're doing that all the time. But also I'm constantly throwing ideas back and forth with Gabo, Josh, Matt Robinson, etc. Um, and Nevin spends quite a bit more time with them actually, um, to understand how we can work closely together. So the short answer is yes, we speak quite a bit.
Well, I would expect that to be the case. It must be said.
Yeah, I
Um,
think actually interesting thing kind of related to that is from the protocol's point of view, our goal is to grow TVL, and anywhere that um, folks are going to lock that up is a good thing. And you can think about like if you flip it around and think about Circle's perspective, the only thing that Circle cares about is growing their market cap, because what they're doing on the back end is um, taking the dollars that people give them to create USDC, putting them in a bank account, and they're putting them in you know like literally in bank accounts in diversified across like cash, and I think what they refer to as cash equivalents, like treasury bonds and stuff like that. But they get their revenue is fully based on what is the market cap, what is the yield across their cash or cash equivalents portfolio, and the larger the market cap, the larger their revenue. And so, at the end of the day, the stable coin or the stablecoin platform business is kind of beautifully simple. And then you just want to grow the market cap and grow the yield that you're getting with the collateral. And so, our pay is a great place where we've got a very engaged user base that is already using this thing, and is a place where folks will hold these R tokens. And so that's like a great place to, hold a big chunk. But we also want to expand, and our tokens we want to be plugged into everything, whether it's throughout DeFi in different type of protocols, whether those are like AMM dexes or lending protocols or sexes. If our tokens are getting listed on different things, that would be great as well, because there's huge customer bases. Excuse me, huge customer bases there that where they hold a lot of things on platform. And the beauty about the R token is the um, the the yield on the collateral uh, doesn't really care where the R tokens themselves are held, whether that's at a SEX in a big vault, or on chain, or in a MetaMask wallet, or in a hardware wallet. It doesn't really matter. The yield keeps flowing regardless, and the insurance mechanism works no matter where those R tokens are held. What's interesting about our one of the things that we're excited about the reserve protocol versus for instance, like OUSD or some of these other yield bearing stablecoins, is that there doesn't need to be any custom integration. It's just an ERC20 token, and the insurance and the yield works regardless of where those tokens are held. There's no rebasing component. There's nothing like that. We tried to recreate this. Um, we tried to create this insurance mechanism that works anywhere. I'll leave it there.
Right, interesting. And I suppose the question, because you mentioned centralized exchanges, that you think our tokens can be listed on centralized exchanges.
Yeah, I mean, the caveat there is like anything can be listed on centralized exchanges, as long as it works within their listing parameters.
Yeah, sure. If, for the sake of argument, let's pick Circle. Let's say Circle think that an R token is a pretty good idea with just Circle, so they just wrap their own coin, and
Sure.
then they apply to Binance and say, hey, Binance, why don't you list this wrapped circle coin because it's really cool and you'll do a lot of business with it and we'll get loads of yield and everyone's happy.
Yeah, Circle's like doubling up on their yield, right?
Yeah, exactly.
Yeah, that's definitely something that could happen.
What about and can I ask, okay, so do you think that some of the, okay, so I think this would go two different ways. So if all of a sudden, like people have this FUD about Tether, is that it's, like, oh, they're just Tether's a scam, hypothetically, right? But obviously people have been able to redeem quite a lot of US or dollars from USDT. So that's not much of a concern. But would our tokens, with their insurance, if USDT is put inside of our tokens and then there's that insurance on top, would that allow Tether to be a little bit more disingenuous because there is that, like insurance that is on a portion of the USDT that is wrapped inside of an R token?
Yeah, I mean, you can imagine a world where someone launches an art token that is literally called insured tether,
Yeah.
right? Where the yields are, and the collateral basket is something like AUSDT and CUSDT, which, by the way, typically has higher yields on lending markets than USDC. Um, and so then, those yields can fund a larger insurance pool. This is, theoretically something that is more trusted than Tether because there's lots of FUD about Tether. No comment on whether or not it's real or not. I think, like you mentioned, they redeemed quite a bit of dollars for Tether over the last couple months. Um, but uh, but yeah, that's definitely something that could be launched, and I might guess that there's some product market fit there, given the um, hesitation around holding Tether.
But I could also see it going the other way, where it's like if our token users are hesitant to use insured Tether, then it would maybe incentivize Tether to all of a sudden start disclosing its real positions so that it would get included in our tokens in greater volumes. That's also something I could see happening, but I don't know how keen the users will be. So.
Yeah, I
Um,
think that comes down to product market fit, doesn't it? So you could you could have a wrapped stablecoin which might have an additional 20% insurance, for example, to offset any potential unknown investment strategy of said stablecoin, which means that when you trade and keep that stablecoin, it's more safe than the native stablecoin itself. And if you're a smaller stablecoin company and you want to grow your market, maybe that's a pretty good way of doing it because the incumbent can't match you. But of course, then Tether might just do exactly the same thing and say, "Ah, look, just use our token instead." But I think the next portion of the infancy of the market will be hopefully watching these companies try and work out what the most competitive strategy is.
Yeah, I think it would be amazing if 8 months from now, Tether and Circle are battling for our token dominance. That would be a great outcome.
Yeah, that would be pretty good.
um,
Um,
Go ahead, Thomas.
no, I was just continuing to laugh about that. Um, yeah, if I think it's like 70 and $100 billion market cap stable coins are battling to figure out where they can stuff their stable coins within the reserve protocol, that would be great.
Yeah, that would be really good. Anyway, I'm not going to let myself get carried away. But Brayden, do you want to ask the next question?
Yeah. Okay. So basically, totally switching topics here. So
Sure.
there's going to be a grant program. Okay. Introduced for reserve. What can you tell us about it?
Yeah, so this is something we're getting ready to launch. We're candidly just figuring out some of the mechanics of literally like how do you pay people in the grant program? Is it like a contract? Is it a gift, etc.? But we, like many folks in the DeFi ecosystem, we want to help get people off the ground um, that are trying to build things that would, further the development of the ecosystem. So whether those are, whether that's developers that are writing new collateral plugins or contributing to the protocol generally, or helping with marketing of various things, or whatever it is, creating how-to guides, things like that. We want to, issue grants to a variety of different things to help them do so. We'll be we haven't nailed down exact numbers yet, but we'll be setting aside we'll be committing a chunk of dollar denominated capital as well as RSR that we'll be issuing grants from. More to come on this in the coming. I don't want to commit to a specific date as we nail down some of the details on it. But this is something that Sinatra has been working at quite a bit, and we're excited to share when it's ready.
Cool. Thank you.
Yeah, excellent. Well, we'll keep our eyes out for that. I have a quick question about the register, the DApp.
Sure.
We've seen some screenshots. Everyone, I think, is excited to see it in action. The interface looks great. Is it built and ready? And how do you see other dev teams taking that code once the app is launched? Because I believe it's going to be open source, and building that into into other areas of the real world, maybe. Do you think like banking apps or finance apps or gaming apps will build the code in?
Yeah, it's first of all, it's definitely still in development. It's not yet, but like you mentioned, it will be open source. And similarly to how other DeFi apps are, anyone can fork it and run it themselves. And also, just like those apps, people can in theory take the whole thing or just components of it. I think one interesting goal for me is similar to how Uniswap makes it so that with one line of code, you can embed a trading interface in any website. You can do the same for minting and redeeming our tokens. And so that would let anyone that is, launching an R token and wants to create their own website for it and, have like value props and things like that, would allow them to, embed our own audited smart contract interface in there. So yeah, that's a goal is definitely to make it flexible and to build these tools. Like we've spoken about a bit, we're building a platform, and so we want to build tools that enable other companies and other products and other developers to develop their products. And so, think about it like developer tools, right? Like what are the developer tools that we can do to make Register as flexible and embeddable as possible?
Excellent. Yeah. Again, that's another area I'm really looking forward to see what people come up with, because it's a super easy, low programming barrier to get into minting and redeeming, insured stablecoins, which you just without reserve, that, because even to start thinking about how to do that would be probably beyond anyone even coming up with that as a suggestion.
Yeah, exactly.
It's me again. Just a general one. Any thoughts on gas fees being paid in fiat or R tokens? Because Reddit just linked up with FTX, where they can redeem. You can redeem your Reddit points, I think now, for cash or at least for gas.
Oh, interesting. I actually haven't seen that. But in terms of transfers of our tokens, I think we'll be limited by the Ethereum network in the way that it functions, and so like gas fees on Ethereum are paid with ETH in order to move any ERC20 tokens around. That being said, though, if our tokens are on a centralized exchange, those typically have low to zero transfer fees because at the end of the day, they're just moving who owns this asset in the database, and they don't need to actually transfer on the Ethereum network to move those funds around between users. So if our tokens are listed on centralized exchanges, or for instance RPay, the those transfer fees will be limited, or will be set by the company itself. Also, I think it's likely that successful R tokens are bridged to L2s or Alt L1s, like Polygon, Arbitrum, Optimism, Phantom, Avalanche, whatever it is, where the fees are much lower. And so, like just like any other ERC20 can get bridged back and forth between those networks, I'm expecting that successful R tokens will be as well. And then folks can use them to, whether it's to pay, to transfer between P2P, to buy things, etc. Wherever those, and this is similar to how we're excited to be building on top of Aave and Compound, because there's teams there that are thinking about how we expand the demand for borrowing. These L2s and Alt L1s are thinking about how they can expand the use cases and usage of their networks at all times. And so yeah, so that's definitely something that will be like technically very feasible. And like I mentioned before, again, the insurance would go cross-chain there, which is exciting. If the R tokens are bridged to into another chain, the in the case of a default or any problems like that, like the insurance would function just as normal for the R tokens that are held on those chains.
Wow.
Cool. It's just opening up, isn't it?
Yeah, that's a lot to think about. So I guess that goes perfectly with my next question here. So which areas of DeFi do you think are the closest to being adapted to real world use, similar to what Reserve is using, or Reserve is doing right now, where the end user doesn't realize that they're using crypto in the Reserve app?
Yeah, it's interesting. Um, well, I think it's likely that collateralized lending expands more. I think margin trading is like a very big thing uh, in brokerage accounts around traditional finance. Um, no reason that can't be extended, and companies can't plug in their interfaces to DeFi lending. Um, but separately, on the other side, like you were saying, the let's see, like one example. I don't know if you guys have heard of Steppen, which was a salon game. It was one of those things where like people that weren't into crypto were getting into it because it was like a addictive fitness app. I think they had some issues with their economics, and it became a bit Ponzi-esque. Um, or rather, let's not use the Ponzi word. It became a little bit unsustainable in
Yeah.
keeping up with the growth to make sure that it could keep up with the distribution of new assets. But I think that was something that was like widely touted as people that weren't into crypto were using it and also barely knew that it was crypto. So I think we'll continue to see more and more apps like that. I think something that people forget is that at the end of the day, crypto is a technology and blockchain is a technology. And I've said this in a couple places, but like people don't watch Netflix because they use AWS. They watch Netflix because the streaming's fast and they've got a large library. And I think the crypto natives and the crypto obsessed, I'll venture to just throw us all in that category. We're excited to use things because it's crypto, but I think at the end of the day, people will use crypto because it's a better. Companies will use crypto because it's a better technology to solve the problems that they're trying to solve, and products that are built that can leverage this new technology will be things that take off. And it's what just like we don't know what kind of database technology Netflix uses. We do because it's in the news. They use AWS, and they like famously adopted it in the tech community. But I don't like. I would venture to say that like under 1% of Netflix users know what database technology Netflix uses, right? And I think it'll be like successful products that take off in crypto as well, where people don't know that it's crypto that's behind it. They just know that they have to like hit confirm in their app before they do anything, just like you do in a normal fintech app. Like if you go trade on Robinhood or if you go deposit money at SoFi, you hit confirm before you do anything, and that's like a normal user interface. Instead, it'll just be you're confirming a transaction on the blockchain as opposed to confirming a line in their database. And I think that'll be similar. There's lots to be done on the UX of managing private keys for sure. But again, um, companies have had passwords and usernames forever. I think it's likely that we're going to start seeing a lot better UX on that front as well.
Yeah.
Good. I'm excited to see what you guys come up, or I mean, what happens.
Yeah, because there's the two areas of custody, isn't there? You either give an app user custody of their own key, or you provide custody for an app user, and they probably need to know the difference, don't they?
Yeah, there's been some interesting developments on this. I think Coinbase just released something where uh, I don't know the details exactly, so I'll probably butcher this, so don't hold me to it. But I think it's something like you can recover your private key by, instead of contacting the company, you can have your friend confirm it. Right. And so there's a way to recover your password or reset your password um, that works in a self-custody world uh, in a safe manner. And so I think we'll see more and more clever ways to do that looks familiar to users from a UX perspective, but is still allowing people to manage their own keys themselves and manage custody.
Mhm. Slightly left field question, but because we asked Taylor this, do you have any thoughts on the ETH merge that's coming up? I think it's penciled in for mid-September still.
Yeah, I think it's something I've been hearing about for years now. So I'm excited to see it happen, just like any product launch. Um, yeah, it'll be really interesting to see what happens. I think there's it's people are talking about some like real throwback conversations on like, is it gonna fork? Is it gonna be like Bitcoin Cash versus Bitcoin? Things like that, which is kind of funny. Real throwback to the original airdrop in crypto. Um, but it'll be interesting to see what happens. I think the reality is that like a lot of things are very different on Ethereum than they were on Bitcoin back in the day. And actually, number one, the difference is stable coins. And so like if think about it from Circle's perspective, they're not going to allow the supply of USDC to double overnight, right? They're going to choose one. I think they came out. They're going to choose the proof of stake chain. But I think the reality is that stablecoin issuers, which is like the number one killer app of Ethereum at the end of the day, it's if you look at CoinMarketCap and go down the list, I think like half of the top five, even half of the top are all Ethereum stablecoins. And they kind of have a lot of power now because they can choose which chain they're going to support to redeem deposits for cash on. And I think they came out and said that they're going to use the proof of stake one. But you're all of a sudden going to have all these worthless stable coins that are floating around the proof of work version of Ethereum. And if you think about like what is DeFi built on, it's kind of built on like stable coins and offsetting trading stable coins with other things. And so there's going to be a lot of worthless stable coins that are floating around. It'll definitely be an interesting thing to watch, but it seems likely that the proof of stake one's going to work.
Yeah, part of me just thinks that we're going to see ETH Classic 2, aren't we? But never mind.
Yeah. Yeah, but like even with the ETH Classic, there weren't any DApps at the time. Um, now
it's just
DApps to continue to support. And that, actually, just to finish on that, like the DApps on Ethereum will work. I think the issue is that the assets within the DApps will be many of them will be worthless because they'll be stable coins that chose the other network.
Interesting. Yeah.
Any areas of DeFi that you think we should check out that are exciting? And just before you answer this, we are getting close to our last question here. So if you're in the audience and you do have some questions for Thomas, I think you can raise your hand, and I can see that, and I can eventually bring you in just a few moments here. But again, to repeat the question, any areas of DeFi that you think we should check out that you think are exciting?
Um, yeah, let's see. So what some of the things that I've found uh, exciting in the DeFi world is seeing where people get, let's see, where to start here. All right, well, so like first of all, I'm a sucker for stablecoin yield farming. Um, I've always been generally fascinated by the curve wars. One thing I realized after doing it for a while in 2021 is that it's kind of annoying to do that stuff every week. Like claiming your rewards, converting it to something else, etc. So one of the things I almost tried doing before I joined Reserve was starting a few things that were basically like DeFi automation toolkits for yield farmers. So I'm that's like that continues to be a hobby of mine. But let's see. Uh, there are some cool things actually happening in that space. Like um, 0x Alanara. I've actually never said that outside or out loud before. Uh, like they built the Union, Redacted built Pyrex, Badger DAO built another CVX wrapper. There's a variety of things that are becoming like automated yield farming, which is kind of interesting. Um, Massive caveat that like none of this is investment advice or anything like that. These are just things that I think are cool. But I'm generally fascinated in DeFi where there's ecosystem where there's like real economic activity that generates real cash flow. I think if you think about like the money verbs, there aren't that many of them. Although there's endless financial engineering that creates all kinds of crazy new um, types of assets. But like lending and borrowing, trading, those are kind of the classic money verbs. And so the products that are building those, the companies that are building those types of products in a way that like creates real cash flow from real usage, I think is really interesting. Um, the other thing that I find like most exciting about DeFi is the composability aspect, and it's the thing that makes Reserve possible generally. Um, you can take these composable positions in like lending, anything like and put them into other areas and create these products on top of them, which is really exciting to me. So I'm excited to see like what other composable uh, money verb financial products are created um, that we can leverage to safely capture the yield to create, to throw into new art tokens, kind of like I was mentioning before. Um, I think it actually does bring up something else. I realize I'm going a bit off topic here, but at the end of the day, like keeping up with inflation, quote unquote, is only really possible by harnessing real economic activity. It People typically try to do this over the long term with like the stock market, um, where you harness the growth of all the businesses which are all working to grow themselves, and you invest in a diversified manner, and but what you give up in that case is stability. Uh, and you take on a lot of volatility, and you have to look at it with a real long-term view. My hope is that some of these new composable financial systems that have real cash flow, that are all in and of themselves trying to grow, will allow us to harness more and more economic activity and package it together into risk-adjusted packages, and take the yields and pass them on to folks so that they can have a better way of keeping up with inflation. Um, yeah, I rambled a bit there, but that's some of the stuff that I'm excited about in the DeFi world.
Oh, that's great. Okay,
Thank you.
I was going to ask one more question, but I'm mindful of the time. So if we just open it up to the floor, Braden, and see if I notice Flamingo Mafia has a question, I'm guessing.
Yes, Flamingo.
Okay, cool. We'll just go with those then.
Yeah. Hey, great to get to speak to you, Thomas, and thanks for taking the time. Um, so I kind of have two questions. I'll start off with a recent event. I know a lot of people are wondering about, what happened to Tornado Cash, and do you see that, opening up the doors to potentially influencing Reserve in some way? Like, do you think similar things can possibly happen in the future, or how is Reserve approaching this recent event?
Right now, we're sitting on our hands, um, and seeing how it plays out. There's definitely. I think it's a very interesting thing that happened. I think Coin Center released something that kind of summed it up well, which is that this is the first time we've seen these entities sanction a tool as opposed to a person or an entity. Um, and it's kind of like a big change from the past, in that it brings up all kind of questions like, is can you sanction a tool that people can use for a variety of different reasons? Can you go after people that are writing software, like all that different stuff? But we don't really think that it affects any of our plans at this time, and but we're definitely keeping an eye on it, like other things that are happening. Um, I guess so. Like one interesting thing about it is. Um, I think that wrapping different types of products, every time you wrap it, you bring it other legitimate, you bring other different types of users um, into the mix. And so one interesting thing about an R token is that it's like you're wrapping an Aave or compound lending position on USDC. And then USDC itself is like a stable coin with tons and tons of users. And so like every time you wrap something, it brings in like more and more people. And so it makes it, I think, less likely for regulators to want to like limit good actors from using something. And so yeah, so does that make sense?
Yeah, yeah, that makes sense. So would it be possible to, like, say, I don't know, regulators for some reason, block access to certain people for the underlying collateral of an R token, say USDC? So would simply having USDC wrapped within that R token, like, kind of avoid that scenario of people, you know, being locked out or blacklisted?
Um, like, all right, let's talk through technically. There's a couple different things that, like, say, um, they wanted to sanction USDC. Like, USDC can blacklist certain addresses, right? And they like maintain that list publicly. They could, if they wanted to, if they were to blacklist certain wallet addresses, it would limit those wallets from doing a variety of different things, whether they hold an R token or whether they hold USDC. Um, but it would be difficult. Well, they could also blacklist the Aave USDC position, but there's tons and tons of folks in that are using it for a variety of legitimate reasons. Another thing that they could do then would they could also throw like an R token address on that list as well. But again, there's now you're bucketing all the people that are in the Aave USDC position. You're also bucketing all the people that generally use USDC. And so I think like every layer of wrapping is adding like another. It's like bringing in more and more people to this fold that would be affected by something like that. I realize I'm not saying this like super clearly. You'll have to forgive me. I'm on like coffee cup 3, but
Yeah, no, that's fine. Just one final question, then I'll hop off. But so you were mentioning how, you know, it's interesting that um, R tokens, regardless of where you hold it, um, you know, Ledger or MetaMask, anything, you still, if it's yield bearing, then you still receive that yield regardless of where you hold it. Plus the insurance works regardless of where you hold it as well. Um, Looking at the RSR side, um, it's interesting how, I mean, maybe this changed. I don't think it has, but that once you staked your RSR on an R token, you're going to receive a staked RSR, kind of equivalent of your staked RSR, and you could take that STRSR or whatever it ends up being called,
Sure.
and kind of transferring that over to different wallets, different pools. If say a STRSR and R token pool gets created or something like that. Um, how do you see? Because I guess now you eliminate the need to unstake and then transfer your RSR in and out of things. You can just interact directly with that staked RSR token. How does that? I mean, I guess we're kind of looking in the future here, but how do you see that impacting, um, like the RSR market? Because now you're not unstaking and selling or swapping RSR.
Yeah, I think it's so like quick note. So there will be, a staked RSR token for each R token, right? And so it'll be interesting to see where folks are, excited about providing insurance and staking their RSR assets. But yeah, like you mentioned, staked RSR will be fully transferable, and so people can trade directly with those staked RSR for other assets, um, unstake and then stake it somewhere else, or unstake and then trade, whatever that is. It's I don't know. I have a hard time like fully predicting where this will go, but you can see. I don't know if you look at other DeFi protocols, you can see that for instance, Curve, they've got a variety of different protocols that are wrapping the locked Curve token VECRV. There's like CVX CRV, there's Stake DAO CRV, there all these different things, and then each of those have their own markets for those assets, and so who knows how it'll exactly play out with the staked RSR versus RSR, and the staked RSR versus all the other staked RSR positions. But yeah, it'll definitely be interesting to see how that plays out. Whether or not there's trading pools for those different things, and people are figuring out like, because let's see, what are some of the other dynamics here? So there will be an unstaking delay, right? Which makes sense. It's similar to any proof of stake network, where if you stake your assets to secure the network, you have to wait a couple weeks, oftentimes, before you can, from the moment that you unstake until you actually get those things back in your wallet. And it'll be similar for RSR with staked RSR. There will be a delay a delay parameter that governance can set. That will likely be around a week or two. And so, there might be a market for people trading their staked RSR for RSR so that they can like forego that delay. And I imagine that like staked RSR will actually be worth more RSR because of the yield. But there might be like a liquidity premium that RSR has itself, and so like the difference between those two things might dictate where those two things trade against each other if they were put into a trading pool. I don't know. I'm trying to think through some of the dynamics here. I don't have this fully fleshed out in my mind, but yeah, I can imagine. I can imagine that being why people would want to trade staked RSR directly for RSR would be to like forgo that staking delay.
Right. Okay. And just a follow-up question, because from what I'm aware of, the staked RSR it's not a wrap token, if that's correct. So, but it allows you to kind of interact with it similarly to a wrap token. So, what exactly is the difference?
Um, Well, so a wrap token is just well, there's a couple different types of wrap tokens. There's wrap tokens that are wrapping assets that are held off chain, like wrapped Bitcoin, for instance, where the collateral is held within the the Bitcoin network. And then a centralized custodian is determining who gets the wrapped Bitcoin. There's also, I think wrapped ETH is like a specific thing that just makes it a more generic ERC20 that can interact with smart contracts. But then, if you think about like what other ones are, they're typically just a token that is deposited into a smart contract that can do other things. And so, I know that there's some like non-transferable tokens that then have a wrapped token that folks can, that enables them to move it around. Like an example of this would be VECRV, which is non-transferable from a wallet. But if you lock that, if you give someone else your CRV and they lock it, and then issue your receipt token for that locked position, then you can trade that token. And that's like what CVX CRV is. So I think, so RSR, I think, is technically fairly similar to that, where except that the staked RSR itself will be transferable. So the difference is, RSR gets deposited, and then the protocol in the smart contract is keeping track of what is that, how much RSR is that redeemable for based on the yield that has been collected from the collateral. I think I answered your question, but I'm not exactly sure. Did I cover
Yeah,
it?
yeah. That's perfect. Thanks, Thomas, and yeah, thanks for taking the time again.
Yeah, no problem. Thanks for jumping in here. Guys, this has been a lot of fun. I got to jump here. But yeah, really enjoyed going through all these different topics with you guys.
Okay, yeah. Thanks very much for your time, Thomas. I'm sure I speak for everybody to say thank you and enjoy the rest of your day.
Yeah.
Yeah,
Big
likewise. Happy Sunday.
big thank you, Thomas. Take it easy.
Have a good one. See y'all.
Take it
bye.
easy, guys. Later. Bye.
Alrighty, thanks very much for listening. Catch you later.